The increasing central bank purchases of silver, which you've correctly documented, surprised me. It isn't something that I've seen before. And I've been struggling. Well, I haven't been struggling. I've been asking people who are smarter than me what it means. I haven't received a satisfactory answer. Part of it would suggest that foreign central banks are becoming semi-speculative, that they have looked at history and seen that silver has outperformed gold after gold has established a trend. And if they think gold has established a trend, perhaps rather than just defending their economies with gold, they're going to try to make a profit. Historically, the concept of central banks making a profit is a concept that has never occurred before. So I'll leave the efficacy of those strategies to other people. The other theory that I heard is that India in particular, but perhaps India and China too, as a consequence of historic cultural attractiveness to silver, are going to encourage retail savings in their own countries. And so part of me has a trouble believing that, because I think that in India, for sure, silver would crowd out the rupee. In other words, people would go for real money as opposed to government money. Too sweet. And I think that the government might be smart enough to understand that. China might be trying to do the right thing. I don't know. What you suggest, which is to say that we are seeing increasing central bank purchases of silver, is a phenomenon that I've never seen before. And I can only speculate as to its cause. If your listeners will replay earlier interviews that you and I did, suggested that the leadership in precious metals markets needs to be established before gold follows suit. If you start seeing momentum in silver, however, silver bull markets are very, very, very emotional. I'm not saying Russian central bank buying, Chinese central bank buying, Indian central bank buying will give silver the momentum that it needs to break out. What I am saying is that when silver does break out, it's truly an amazing financial circumstance for those speculators who can afford it. And those speculators who have the emotional stability to handle the volatility that you're going to see in the silver market. An allocation to the higher quality silver stocks and silver juniors, a small allocation to be sure. An allocation that you can afford to lose 30% of if you're wrong. And an allocation that you can stomach 15% volatility and for no reason other than it's Monday or Tuesday is something you should consider. If demand for gold and silver merely reverts to the 4-decade mean, which is what I think it will do, that implies a 4-fold increase in demand. And that would do a very, very interesting thing to price. Away from arithmetic and into narrative, I note that inbound inquiries, which is to say subscribers to Rule Investment Media, are currently running about 50 per day. The majority of those, interestingly, are non-US now. And they are coming from everywhere. A couple of interesting trends. One, stands to reason, a lot of German interest, because the German government has been even dumber than the American government. And there's a whole generation of young Germans who understand that they were fed a bunch of horsepucky by Merkel and her ilk. I think come to the rightful conclusion that they need to own precious metals. The other thing that's interesting, Donegan, which I've never seen in a market before, is that about a third of my increase, a little less, 30% of my increase, are now coming from young women. It used to be that the gold audience looked like me. Old, fat, bald, white, rich. There is an increasing interest among young women in gold, which, by the way, anecdotally was supported by Costco, as you know, is now, at least nominally, in the bullion business. And they have reported that a surprising number of the buyers of gold have been younger and a surprising number have been female. So I think that's some anecdotal evidence, not statistical evidence, but rather anecdotal evidence, which would suggest that the market for gold and the awareness of precious metals among retail investors generally is swinging up. It's important to note, too, that as dangerous as U.S. dollar participation is, that old Casey joke about the U.S. dollar being the worst currency in the world except all of the others applies when we talk about gold breaking out into nominal highs against the U.S. dollar. In other currencies, gold has performed spectacularly well over the last 5 years. And so I think if you're a saver in almost any currency in the world, other than the U.S. dollar, gold has already established momentum. It's already established a trajectory. And if I had to guess why an American database like Rural Investment Media is becoming increasingly non-U.S., I suggest that the price action in precious metals in those securities has already demonstrated thesis, while in the United States, the thesis is still being questioned.